Kingsman family, welcome back to another lesson. I hope you guys are all well, having a good morning, afternoon, night, whatever the case may be. I am pumped. I have some great vibes going, and I hope I can transport my great vibes over to you guys. I don't know. It's a great vibe. It's a great night. So let's go ahead and get straight into the lesson. For today's lesson, I'm actually going to be covering how we can better spot more accurate opportunities when trading with supply and demand. Today was a very solid day in terms of price action. I had alerted to the chat that there were multiple different opportunities that you could have utilized trading with supply and demand, and I said I would make a lesson later on in the day to explain exactly how you can do it, because that's obviously why I'm here, to better explain how you can start to really break things down and actually apply it to your trading. Because telling you guys something is one thing, but actually explaining it and showing it to you guys is another thing, a whole game changer. So let's go ahead and hop right in. Going to be a short but solid lesson. So let's go ahead and get started. Whew. Let me get rid of this. Okay, cool. So I'll go ahead and we'll stay on Tesla here. Let me just get rid of pretty much everything but our supply and our demand zones. Okay, cool. So we have our supply zones and our demand zones, which are pretty much just supply areas or demand areas, basically being our demand areas, our demand zone are going to be areas or ranges where buying pressure has previously been significantly strong, or areas where price has presented a strong reversal. That's what our supply and demand zones are. Simply just areas where price has previously presented a strong reversal. A strong reversal also meaning A, strong buying pressure, or B, strong selling pressure. And keep in mind, whenever there is strong buying pressure or strong selling pressure in the markets, that is what we want to trade with. That is what we want to track on the charts to then either take our entries or either utilize to take our exits, because those are going to be the areas that are going to present reversals, and not just present reversals, but present reversals the strongest, right? Because obviously we'll see price doing its thing on the chart. Sometimes it'll be consolidating, sometimes it'll be slowly moving to the up or slowly be moving to the downside. But the way that we can best catch trades and catch those solid trades with good momentum is with trading with supply and demand. Now, keep in mind, with our supply and demand zones, there are many different ways that you can draw these zones out. And I like to think of, when we draw these supply and demand zones out, these are realistically just confirmations or ideas that we can use to look to take some type of trade or look to take some type of exit, due to the fact that there has been previously strong ass buying pressure or strong ass selling pressure, which, like I previously mentioned, is what we want to trade with. So basically what I'm trying to say is our supply zones and our demand zones are pretty much just areas where we are likely to expect price to reverse. So basically what I'm trying to say is, if you can spot these areas, supply areas or demand areas, if you can spot those areas efficiently and correctly, you will 100% be profitable, and I promise you that. Obviously, there are other things that you need to apply, such as psychology and risk management, but as long as you can spot these areas correctly, Oh my god, it'll be a huge game changer, and I promise you. And you will also be trading with the institutions, with the market makers, with the large orders, right? And that's obviously what we want to trade with. So I'll go ahead and I'll get into how we can A, spot these zones, B, create these zones, and then I'll do a part 2 on C, how we can trade with these zones. So first, let's go over A, how we can spot them, and then we'll go over B, which is most important, how we can actually create them. So let's go ahead and I'll get started. So I'll go ahead and I will delete this supply zone, I will delete this demand zone, and then I'll kind of explain how those zones were created in the first place. I'll just switch to SPY. I think it'll honestly be easiest. It's probably most versatile, and it's probably most comfortable in terms of what everyone trades. So here we're on SPY. Now, keep in mind, you guys have probably seen me draw, not probably, you guys have seen me draw out my supply and demand zones almost always on the 1 minute time frame. We're going to be doing it a bit different. We're going to be switching to the 5 minute time frame. Now, now on the 5 minute time frame, we're going to be doing things pretty much the same, but there are going to be some slight differences that we are going to add in terms of drawing and creating these zones. So if you're familiar with how I create my zones on the 1 minute, then perfect. This is going to be, perfect for you, which I'm sure all of you guys should be at this point. So we're just going to add some slight differences in terms of drawing them on the 5 minute time frame. So keep in mind, switch to the 5 minute time frame. We're going to draw some zones out. Let me go ahead and refresh because you guys have probably seen my trading views like tweaking out. Okay, cool. So with the 5 minute, instead of using the whole candle for our zone to create the zone, what we are going to do is we are going to use either the bottom or the top of the wick, just depending on what zone we are creating. So if we are creating a supply zone, we are going to be using the top of the wick before a reversal to the downside happen, and if we are using a demand zone, we will be using a bottom wick of a candle before a reversal to the upside happens. So basically what we can already see right here is we can see a strong move and a strong push to the upside. That strong move is showing and indicating to us that there is large amounts of buying pressure being filled within the market, right? And like I said earlier, that's obviously what we want to trade with. So now that we're on the 5 minute, what we want to do is just how we would on the 1 minute, we want to chart out the candle previous to the large move up, which is right here. So we have the candle previous to the large move, which is this one. Now we want to chart out the bottom wick, since we're charting out a demand zone. Now we want to use the wick and the wick only to create this zone. Now we're going to just extend it out just how we would with any other regular zone. And keep in mind, we are going to want to look for the first or second retracements into this zone. Reason for that is because the first or second retracements are going to be the strongest reversals inside those zones due to the fact that there are more unfilled orders laying inside the zone there are more unfilled orders laying inside that demand zone on less retracements inside that zone, if that makes sense. So the less retracements there are into that zone, the more amounts of unfilled orders that are going to be inside that zone, which obviously the more amounts of unfilled orders, the more that those market makers are going to fill those orders and push price back up. So It's kind of complicated, but once you know get used to the whole concept, it's very simple to understand. But anyways, we have our wick, which we used, and we extended it out. We got the first retracement, which was right here. Now, as we did that, we have our correct demand zone. Now we can obviously see we got multiple retracements into this zone. We can see price holding inside of this zone very well, showing and confirming that it was an area that those buyers did take advantage of, and showing that this demand zone was a correct area that we drew out, that then presented the reversal that we were expecting. So if we were to take a trade off of this demand zone that we just created, you can see on multiple different reversals, the trades would have been profitable. Now we can see we had a slight move outside of the demand zone, but we never got that initial invalidation. We realistically just got a sweep outside of that demand zone and then got the push up. But this was basically right before the market was going to close. And you guys know me, I really don't do much trading around this time. So that realistically wouldn't be a setup that I would look to trade. But this setup right here would honestly be this I can't even talk. This setup would stand out to me most. Reason for that is because this is pretty much the first retracement into this zone. I already see that this zone presented a super strong move up, so I know that there are very large buying I know that there is very large buying pressure laying within this area. So I had that as a high conviction area. Obviously, if I were to take my trade and then have my take profit at the previous highs, that trade would have worked out perfectly, and that would have been a beautiful trade. And then obviously in terms of my stop loss, we would either do an invalidation below this demand zone, or I would look for any other near demand zones or key levels that could be stopping price from moving lower, and I would use that as my stop loss. Because I was talking to one of my students today, and I said that sometimes it's fine for your stop loss to be a bit wider, but it has to be a reasonable it has to be reasonable for you to make your stop loss wider. You know what I mean? Only make your stop loss wider if you are making it, if you are moving it to another barrier spot on the charts. Barrier spot on the charts just means another spot where price is going to have trouble breaking through, and that should pretty much always be where our stop loss should be. Our stop loss always needs to be at a barrier spot on the charts where either buyers or sellers are going to have trouble breaking through. So keep that in mind. I'm pretty much covering like the part C, like the part 2 of how to trade off of these zones, but I'll still do another video. I just like to talk a lot and provide as much value as I can. You guys know that. But we have this demand zone, so boom, we can see we got multiple retracements, and then the most important thing was really just this strong move off of this demand zone. You can see we got this large push, extended push to the upside. Keep in mind we're on the 5 minute, so if I switch to the 1 minute, that move would have been a lot larger. I believe it was this one. So yeah, you can see on the 1 minute how large this move was. So that was a pretty big move, right? Keep in mind, guys, when you draw your zones out on the 5 minute, you don't have to trade on the 5 minute. You can draw it out on the 5 minute and then switch to the 1 minute and then do your trading on the 1 minute, because I know a lot of you are probably used to just trading on the 1 minute and reading price action. So am I. I do the same exact thing. I draw my zones on the 5 minute and I do most of my trading and most of my price action reading on the 1 minute. So Keep that in mind. You do not have to stay on the 5-minute, but you guys can just see so far how strong and how well these 5-minute zones are working so far, right? So we have this demand zone, which I just drew out. So I'll switch to something different. I'll kind of switch to a supply zone so you guys can get a better idea of how we draw out the opposite side rather than, the demand buying side. I'll show you how we can draw out the supply slash selling side. So, okay. So let me see here. Okay, so obviously when it comes to our zones, we always want a big tip. When it comes to drawing out our supply and our demand zones, we always want to look for either a strong move to the upside or a strong move to the downside, because that just means that's where strong orders were being filled within the markets. And obviously where the strong orders are, that is where we want to trade with, right? So when we see that large move, that's basically what we want to trace, basically what we want to create as our zones, right? Basically what we call as our supply zones. So what I'm going to do is I see that there, most importantly, I see that there is a strong move to the downside pre-market. You can see there is a massive push to the downside pre-market. So what I'm going to do is I'm going to, and keep in mind this same supply and demand zone creations applies to pre-market as well. So you can use these zones in pre-market as well. So what I'm going to do, previous to the large move down, I'm going to create the candle or just use the candle as my zone. Now keep in mind it's pre-market, so we're not going to get much wicks. So I'm just simply going to use this candle on the 5-minute and then extend that baby out. Now you can also see here, if I weren't to use this pre-market and I were to wait for this, for example, this move to the downside here, what I could do is I could trace out this area. What I could do is that you see this large move to the downside. So we would obviously want to trace out the candles previous to that large move and trace out the wicks of the candles. So we can either do this blue candle right here or this black candle right here. I'm gonna do a bit of both. So I'm going to do right here and then extend it out right there. And we basically have the same exact zone that we drew out from pre-market, right? So we kind of have, double zones now. We kind of have more conviction and more confirmation because we already had a retracement into that zone showing that, yes, that is an area where the sellers do want to take advantage of, and that is where supply is heaviest, meaning that is where the institutional traders are offloading their positions, aka selling their positions. And since they are offloading such large orders, that is what pushes price ultimately down. So keep that in mind. So that's also why we draw out our supply and demand zones. I know I'm repeating a lot of the same stuff that I'm saying in this lesson, but it's just very simple information that you need to be aware of. And I know a lot of you, don't get it. So that's why I really just try to break it down as best as possible. But anyways, we have that supply zone. We have the double supply zone basically, and then you can see once we got that retracement into our supply zone, you can see we got another reversal back to the downside. And then if I were to switch to the 1-minute time frame, let me just circle this so we know exactly which spot I'm talking about. I'll do this, and I will also do I am so sorry. My brother texted me. What I will do is I will do this. I'll mark my final target out as this demand area. Reason for that is because that demand area is the spot on the charts that is likely to present us with the nearest reversal. So we obviously want to make sure that we are taking profits before that reversal. That's why we mark that area out as my take profit. Again, very simple, but I just want to make sure that it's glued into your guys' mind. So, okay, cool. I'm going to switch to the 1 minute now. Now you can see if I were to enter right here, that trade beautifully flushed to the downside, tapped the demand zone in which we had drawn out. And you can see each time it tapped our demand zone, it tapped in, bounced into that demand zone, buyers stepped in, and we each time reversed and bounced off of that demand zone, right? So, and same thing with the supply zone. Each time we tapped into the supply zone, we reversed and we reversed significantly from those supply zones. So drawing these zones out on the 5 minutes and drawing them out with the wicks rather than drawing them out with the candles is going to be a huge game changer for sure. Now, I'm not saying to completely shift your style of how you change or chart out zones, but I'm just saying is to definitely implement drawing out zones on the 5 minute with this type of style and then switching to trade and read price action on the 1 minute, because it will be a huge game changer for you guys. And it will really, really help you better understand where there is just simply either high demand or where there is just simply high supply, which is again what exactly we want to trade with, right? It's very simple, but it's hard to spot sometimes. It's hard to see, it's hard to understand, but when you kind of explain it and talk about it, it sounds like, first grade information, but there's more to it. And that's why I try to give you guys and provide as much as possible. But let me kind of do one more example before I go ahead and I wrap it up here. Let me find a solid example. So again, we're realistically just looking for a large move to either the up or to the downside, and then we chart the candle previous to the large move. And we don't just chart the candle, we chart only the wick of the candle for our zone. So what I'm going to do is I already see this huge move to the downside, right? Indicating that there is huge selling pressure, right? So since we are drawing out the supply zone, we're going to mark out the top of the wick. Let me get rid of everything here on NVIDIA. So we're going to mark out the top of the wick. Boom, boom, and then extend it out. Then what do you see? You see a nice, beautiful retracement into our zone. You see liquidity being swept. You see price swiping, or sorry, not swiping. You see price sweeping those highs while still holding inside of that zone. And then you get that reversal, which is basically all the confirmations you need and basically one of the main confirmations that consist in the Tukhi strategy. And then obviously if I were to zoom out and see what were to happen, you can see price continued to move to the downside. And then obviously price closed, not price closed, market closed, but you can see even in after hours, price continued to significantly move lower and lower and lower. Then even the next day, lower and lower and lower and lower, right off of that supply zone. Now, it's not just reversing off of a supply zone, right? The market makers and institutions, they don't just see a rectangle on the charts and say, oh, let's dump price or let's reverse price at that rectangle. Keep in mind, the reason we are drawing out these zones is because these zones indicate areas of high buying, aka high demand, or high selling aka high supply. That's why we draw these zones out, to spot high demand or to spot high supply. And when we spot those things and when we get an idea of where it is, that better helps us understand where to trade, where to enter, where to exit, where to put our stop loss in case price does, invalidate our entries. So, trading with supply and demand and trading correctly with supply and demand is honestly the only correct way to really properly trade in these markets, is just trading where there has been large amounts of orders placed, and also kind of trading within the footsteps of the market makers, right? So that's going to be that. I know I said it was going to be a short lesson, but I went over a bunch. I will not most likely, I will be doing another part on this, on how we can actually utilize these zones real time, and how the market, when the market is open, how we can actually use these zones to take trades off of, what candles to read and what candles to look for inside these zones to before we take these trades. Just kind of better break things down so you guys can actually best understand how to trade off of these zones. So you're not just trading when price immediately hits supply or immediately hits demand. Because, yes, you can be successful doing that, but you want to make sure that you are entering within the right spots inside that demand, and entering within the right spots inside that supply. So other than that, I'm going to wrap it up here. Much love. If you guys ever have any questions or anything like that, just feel free to hit me up in the Discord or shoot me a DM. But it's going to be end of the lesson. I'll see you guys next time. Have a great rest of your night, morning, day, afternoon, weekend. Much love. I'll see you guys next lesson.